This is your Wall Street wake-up call. Apple posting its third straight quarter of declining year-over-year revenue and profit. Let's bring in Angelo Zino, an equity analyst for CFRA Research. So Angelo, let's begin with iPhone sales. 45.5 million in its latest quarter, down 2.5 million year-over-year, but still slightly above estimates. Now this barely includes the iPhone 7. So is it fair to sound the alarm on Apple when these results don't necessarily tell the whole story?
Yeah, I say when we look at the iPhone results, 45.5 million units, slightly above where we were looking at and where TheStreet was looking at about 45 million. So overall, I think from a unit perspective, the numbers came in just in line. I think we were a little bit disappointed about the selling prices, and I think that had largely to do with some of the supply constraints that we're seeing with the initial launch of the iPhone 7 here, specifically from the higher priced Plus devices. But that being said, to your point, it only included 9 days of the iPhone 7. Most of the quarter still came from that iPhone 6 prior launch, which we well known was a a lackluster device launch. So our view is expect better times as we start approaching that holiday season, and we remain very optimistic, if not more so, post this call on that iPhone 7 cycle.
Well, and Apple is guiding for an increase in year-over-year revenue for the quarter that we're in now, which, as you mentioned, includes the holiday shopping season. But when we hear that from analysts, Apple's best days are behind it, I mean, their biggest competitor, Samsung, is out of the game, so to speak, with the production halt of its Galaxy Note 7, which was supposed to be an iPhone killer.
Yeah, I mean, when we look at Apple and kind of look at the longer-term business prospects here, we would kind of be in the camp and saying, listen, they need to eventually come out with something outside of the iPhone. However, when we start looking at the company today and really look at how it's positioned here over the next 2 years, we continue to think that they're very well positioned with the current iPhone 7 launch, as well as the next generation device on the company's 10-year anniversary next year. So we're actually very confident where the company is positioned today. However, we would kind of be in that camp in the sense that they need to start diversifying that revenue base here.
And does that diversification come from services?
Services will help. The problem here is services still represents only 13% of the revenue base. But the good thing is it's growing pretty quickly. We did see an acceleration of growth here in the quarter, grew 24%. So that's a nice figure. We expect that the growth numbers to continue to improve here in the coming quarters. So yeah, I mean, services are going to help. It just needs to start becoming a bigger contributor, and we do think that's going to happen over time.
Well, yeah, I mean, iPhone revenue is about, what, 63% of total revenue, so services has a long way to go. I know you're bullish on Apple as a company, but what about the stock? Give us your outlook there.
Yeah, so we continue to have a strong buy recommendation on the shares post-earnings here. Our 12-month target price is $130. It represents about a 13 multiple to our fiscal year 18 estimate. And when you throw in that cash of about, net cash per share of about $29 per share, we think that offers, some downside protection to the shares. Well,
cash is always a good thing to have. All right, Angelo Zino from CFRA Research, thanks for joining us.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.